What's up guys, it's Zen here with Zen Trading Academy. Welcome back to another technical basics video. You've seen charts with squiggly lines, colorful lines, and you don't know what they mean. So today, I'm going to go through 3 of the most popular indicators. I'm going to cover volume, VWAP, and moving averages. I'll share with you how most people will use it, and more importantly, how I use it to trade the bursa market. If you could take a quick second to scroll down and smash the like button, I would really appreciate it. It helps my channel grow and reach the people who need help. So let's not waste any time, okay? So technical indicators help traders build their analysis. It helps them understand the price action and it helps them understand the emotions of the market. But indicators are just reference points, and just because the stock usually respects an indicator doesn't mean they have to the next time. So you should use these indicators as extra confirmation rather than only buying based off one single indicator. So arguably the most basic yet the most essential technical indicator is the volume. It's so common that most people don't even count this as an indicator because it's almost always in every single chart. The volume refers to the number of shares transacted in that certain period and is one of the strongest confirmation indicators. So the general rule of thumb is that strong volume shows strength and low volume shows weakness, but this depends on the direction of the charts. If price is going up and volume is going up as well, it's a good sign of strength and is likely for the momentum to continue forwards. But if the price is going up but the volume is low, it's a sign of weakness and a reversal is likely to happen soon. Now the way that I usually use volume is to identify stocks of interest. I only look for stocks that are trading above 1 million volume because that shows that there are people who are interested in trading the stock. And high volume stocks usually catch more people's attention, which gives me a higher probability of catching momentum. The second way that I would use volume is to confirm my breakouts. For example, when the stock is about to break the high of the day, I want to see volume into the break just to confirm that people are starting to buy and that we can start to expect some buying momentum to push the stock higher. Here's another example of a strong breakout with volume pushing into high of the day, confirming that the momentum is coming in and pushing the stock higher. The third and arguably one of the most important things I use volume for is to identify areas with strong support or resistance. When I'm looking at the 15-minute chart, I'm looking for pivots with high volume. This proves that it is a zone with high buying interest, and if it's a resistance, there's most likely going to be a lot of people holding the stock at a certain price level that will increase the odds of the selling pressure. Now the next indicator is probably the second most common indicator for traders, and this is the VWAP. This is another indicator that I personally use as well because it takes into account both volume and price, which are the two main pieces of information that I use. So the VWAP tells you the average price traded in the day with respect to the volume traded at each price. The most basic way to understand the VWAP is, when I see the line, I read it as most of the people who bought the stock today are holding at an average price near the VWAP. Many traders use this as a support and resistance lines, and a lot of strategies involve buying around the VWAP. But for bursa specifically, I don't find it as effective. Instead, I use it to gauge who is in control. If the price is trading above the line, buyers are in control and people holding the stock are generally positive on their position. Vice versa, if the price is trading below the line, sellers are in control and people holding the stock are generally negative on the position on the day. So by looking at where the price is compared to the VWAP, you can gauge how most people are feeling depending if the price is higher or lower. It is also good to note that institutions love to buy around VWAP, so if a stock keeps rebounding off of the VWAP with strong volume, there's a good chance that institutions are buying, which shows that the stock has upside potential. Again, one single indicator is not sufficient to be a buy or sell signal. That's why people use this next indicator, the moving averages. Since the stock market is filled with noise and it can be quite hard to understand the price movement, the moving average cuts out all the noise and shows a smooth line of the average prices over a set period. It's usually shown as moving average and bracket number. This number represents the period. If you're on the minute chart, moving average period 10 will show the average price over the past 10 minutes. But if you're on the daily chart, moving average period 10 will show you the average price over the past 10 days. Remember, when you hear people use moving averages, don't just blindly follow because the context is important. You have to understand what moving averages they use in what time frame, because a 4-hour moving average is very different from a 4-day moving average. So traders will use moving averages in many ways similar to VWAP. They can use it as support and resistance. Some use different moving average crossovers as buy signals, and most traders use it to read the general trend of the stock. Let me give you a few examples. You can see how this stock really respects the 50-period moving average. rebounding with strong volume every time it gets close to the moving average. Remember, it can also be a resistance, and you can see how this stock rejects the 50-period moving average every time the price approaches the line. Another common strategy that traders use is the 5 and 20-period moving average crossover. You can see that when the yellow moving average crosses above the blue moving average, it can be used as a buy signal, and when the yellow moving average crosses below the blue moving average, it can be used as a sign to sell. One thing I need you to take note is that I cherry-picked all these examples to prove a point, but in reality they don't always have to follow these lines, and you have to test the strategy before you start using it. Now, another way that traders use moving average is to read the trend of a stock. The most common way to do it is to look at the daily 200-period moving average. The 200 moving average is most commonly used by institutions to gauge the direction of the stock. It's very simple. If the stock is trending above the 200 moving average, it's considered as an uptrend, and if it's below the 200 moving average, it's considered as a downtrend. The other popular moving averages for you to test would be the 20 moving average, 50 moving average, and the 100 moving average. There's another variant of the moving average called the exponential moving average. This is similar to the moving average, except more weight is given to the recent prices. This means that the prices will react faster and is better used for lower time frames. It is important to take note that these are all lagging indicators. This means that they are based off of past prices and they do not provide any future predictions. So how do I use moving averages? I don't, because I trade on the 1-minute time frame, and the high volatility in these prices do not respect the moving averages at all, and on bursa they don't provide much information, especially on the low time frame. Again, I'm repeating this because I want it to be clear that these indicators should just be used as extra confirmation. Your trade should still be based on the price action. And remember, just because it happened before doesn't mean it must happen again. Make sure you understand how to use these indicators before you start including them in your strategy. So that's it for today's video. Hopefully you found it useful. I would really appreciate a thumbs up. And as usual, I'll see you in the next video. Take care.